stocks and shares. Where do you start? I don't know about stocks and shares. I don't know what to put my money in.
Yep.
I don't know what trading is. Where do I start?
Okay. That leads us into a long conversation. So practical advice, don't worry about it. Put money into, if you're in the UK, into a stocks and shares ISA, which is a savings account, or in America, your Roth IRA or 401k. And if you can invest money, invest it into a stock market index fund. Basically what that means is that you are, instead of buying one company like Apple or Microsoft or Tesla or Google, you're buying a stake in the top 500 companies in America, which would just so happen, like if you put 100 quid in something called the S&P 500, £3 would go to Apple and you'd own £3 of Apple. £2, you'd own £2 of Alphabet A and B. So Google, you'd own £2 of Microsoft, £2 of Amazon, and so on. And that means you can invest in the stock market without worrying about trying to cherry pick individual stocks, which doesn't work for anyone unless you're like a very, very, very professional hedge fund manager. And even then, for those guys, picking stocks doesn't really work. So that would be my advice to people. But I think it does help to have a first principles understanding of what the stock market is and how that kind of stuff works.
I saw a video of Warren Buffett and Charlie Munger giving an end of year address a couple of years ago. And they were talking about, I think Warren had made a bet with a bunch of hedge fund managers to see if they could beat the S&P 500. Have you seen this video?
Yep.
So sick. So, well, can you explain what happened and why that seems to be the case?
Yeah. So the thing with funds, basically, if you're a rich person, you want your money to grow. You don't want, if your money sits in a bank account onto your mattress, it deflates over time because of inflation, because the government prints more money, which gets us into a conversation about crypto and stuff, which we won't go down because I'm not very familiar with that space, trying to understand it myself. Basically, money sitting on its own reduces its value over time. And therefore, if you have money, you want it to ideally increase its value over time. And one way you can do that, you can do it in real estate, or you can do it by buying and investing in stocks and shares. So you own a percentage of a company. If you do what I recommend and what Warren Buffett and Charlie Munger I recommend, you just invest in an index fund which tracks the whole stock market and you don't have to worry about it. But some people invest in actively managed funds. So that's basically, I would give you some money. I'd say, Chris, here is £1 million. I want you to grow my £1 million. You would say, oh shit, Ali's giving me £1 million. I need to grow it. But I need to do something other than just invest in the fund, in the index fund, right? Because I need to try and beat the market. That's what beating the market means. And so you think, you know what? I think Tesla's going to do well. I think Netflix is going to do well. I think pets.com is going to do well. And I think, I don't know, Febreze is going to do well. I'm going to put $250,000 of Ali's money into those things. And I'm really going to hope that it outperforms what it would have done had I put it into just the top 500 companies in the US without thinking about it. And it apparently, according to Warren Buffett, I haven't read the research on this firsthand myself, but what Warren Buffett says and what a lot of advice on this industry is that the funds that do well 1 year, like let's say Chris's fund returns 20%. So my million goes to 1.2 million, whereas the S&P 500, the index market, only returned 10%. So if I was average Joe investing in the index fund, I'd make 10%. But if I gave my money to you, Chris, I'd make 20%. But there's no guarantee that the next year, your fund is also making 20%. And there's also no guarantee that in year 3, your fund is still doing well. And it turns out that there are very few funds, if any, that can actually just beat the market overall, which is what this bet was that Warren Buffett did with all these hedge fund managers, and he ended up winning it and giving the money to charity.
By literally doing something that anybody could do, pressing go all in on the S&P 500, which is in itself kind of a hedged type of investment because it's across so many different companies. Yeah. And you're talking about professional hedge fund managers that were spending time and charging commissions and doing research and looking at, is this overpriced? What's the R number on the Fibonacci sequence over trend, all this stuff.
Exactly.
Just put it in the S&P 500 and the S&P beat all of them.
That's the one, yeah. I think there are some funds in the world, like especially the ones that invest in like early stage startups and things, where you probably do beat the market, but normal people don't have access to those. You have to be like ridiculously rich to be able to invest in those sorts of funds that do that kind of thing, is my understanding. Therefore, most people should just invest in the S&P 500 or a broad stock market index fund.
In the UK and in the US, how would you do that?
In the UK, basically, whichever country you're in, you need to get essentially a stockbroker. So back in the day, a stockbroker was some dude on Wall Street that you would ring up and say, hey, Tom, I want to put $20 on Apple. And he'd be like, all right, I'm placing that order. These days, stockbrokers are online. So you have these online stock trading platforms, and it varies between different countries. In the UK and the US and a bunch of countries in Europe, Vanguard is the most trusted. It was the original kind of index fund place. So you just open an account with Vanguard and you put some money into it. Like, let's say you start with $10, $100, $1,000, whatever. And then you can allocate that money to one of these funds. And the one that I'm fully invested in is the S&P 500, which is just the 500 biggest companies in the US. I don't think too hard about it beyond that. So that's what I'd suggest. Just Google best online stockbroker.
Hargreaves Lansdown is quite popular in the UK. That's quite easy to set up.
Yep.
And you can tie that in. The allowance in the UK is £20,000 per year that you can put in tax-free, and the returns are also not taxed on that. So over time, that 20 will be 21, 22, 23. So yes, you can also set up a standing order / direct debit, which I think is a nice way to portion off a little bit of money. Every single month, I know that X £100 goes into that. And that also permits you to do what's called dollar cost averaging, which is to piece into the market over time. So the market's going to do these little wiggly wiggles up and down, hopefully trending upward, which means that you're continuing to earn money. But by piecing in consistently over multiple months, you don't end up ever catching too many big or too many low points within the market. And you get out of it on the other side, all right?
No, exactly. So like I have a monthly standing order for £500 into the S&P 500 and £2,000 into Bitcoin and Ethereum.
Have you seen Coinbase has a smart investing thing?
Oh, no, I haven't. What is that?
So Coinbase is a trading account that you can use. It's also a wallet for crypto. And they have a dollar cost averaging service that uses the movement of the price to allocate how much of your funds should go in. Oh. So let's say that I want to put £1,000 into Bitcoin and Ethereum every month. It will rate down or up how much it puts in of that £1,000 based on the movement of the coin during that month. So if Bitcoin is more than 10% down, it'll put 1,400 in. But if Bitcoin is more than 10% up, it'll only put 600 in.
Yep.
So it actually sort of smart invests based on what the recent movement of the market has been.
Oh, that's very sophisticated. I should try that out. I just use the recurring buy feature on Coinbase.
Pretty cool.
Yeah.
It's kind of like a rebalancing thing, but it happens automatically within the app.
Oh, sick. So you don't have to
And it's
think
pretty
about it.
simple when you think about it. It's like, has the price gone up a lot? Okay, I'm not going to put quite so much in. Has the price gone down a lot? Okay, I'm going to put a little bit more in.
Nice.
What's happening, people? If you enjoyed that, then press here for the full, unedited episode. And don't forget to subscribe. Peace.